of having several times a year are off on vacation. And hello, everyone. Welcome to show number 104 of This Week in Hospitality Digital Marketing. I am your host, Lauren Gray, and we are now at our 2-year anniversary for the show, which is awesome. 2 years every week, rain or shine, traveling to China, traveling to Australia, traveling around the country or not. I've had the pleasure of working with some amazing co-hosts who I think mostly are on vacation right now. And because of that, you may be having me on my 2-year anniversary show by myself, which is also pretty okay for me anyway, because I just love to talk. And there's a lot of cool stuff going on this week. Pardon me while I have some coffee. So here we are, 2 years, making sure all of our programming stuff works well here. Let me get turned on some stuff. There we are. We'll keep that active and alive for right now. For audio on our Facebook Live and our Periscope Live. For those watching us on there, which because I'm limited to screens today, I can't really see. There we go. We'll go down that way. Have to turn down the audio a little bit so we don't get double feed on our live broadcasting. So with that, 2 years every week, started this time in 2015. Since starting the show, I've had the pleasure of having some great co-hosts, Mr. Robert Cole from Rock Cheetah, Mr. Tim Peter from Tim Peter and Associates, Mr. Edward St. Ange from Flip2, Ms. Holly Zoba from Signature Series Worldwide, and Mr. Stuart Butler from Field Travel are just a few of my regular co-hosts. Also, I've had the pleasure of having several special guest co-hosts over the course of the couple of years. Every 2, maybe sometimes 3 weeks, we'll have a special co-host come join us. We've had anybody from Marriott's to Fairmounts to product services to software platforms to revenue managers, great revenue managers, people from the HSMAI Revenue Management Council, our board, I should say, the Digital Marketing Council, the HSMAI Americas board. And the reason why I mention all these boards and so forth is because we are an ardent supporter of HSMAI, which is the Hospitality Sales and Marketing Association International, which I have the pleasure of participating in on several capacities as on the Revenue Board, Revenue Council, Revenue Board. I keep saying that. Digital Marketing Council, and also the Americas Board. Plus, I also get the pleasure of speaking at their very successful Revenue Management Continued Education Training Program, or affectionately known as ROCKET, which travels all over the country, including, might I say nicely, also Hawaii, which was a wonderful trip to make. And the Hawaiian chapter is actually going to potentially be one of our special co-hosts, our special features come September. We've decided we want to take this show in an interactive way to the chapters for HSMAI. And Hawaii has expressed a very strong interest from my trip out there to them of being the ones that come on, bring on the entire chapter, occupy one of our rooms. For those who have watched the shows, which, by the way, we're on average over 1,600 people per week watch this show from over 22 countries. Now, I say over 22 countries only because the last time we went over and looked and pieced and so forth, we had 22 plus, and we've had even more influx from others. We get questions from around the world, which is a sincere pleasure and honor that people watch the show and learn from the show and get guidance from the show, because we bring to the show, and we have over these past 2 years, news articles, things that are happening literally in the week. Now, if you've ever had the pleasure of co-hosting with us, you know this already. We always leave an empty chair. So if somebody wants to join us from anywhere around the world, they can live video if they want, or in the chat window on the side. And in that, they get to ask questions or contribute to the conversation and give a great perspective addition as to what they are asking in the industry of hospitality. And we send out literally the night before, last night being the case, Thursday night, we send out an aggregation of all the suggested topics that are of relevancy for this week. And we tend to grab bag those and pick from those what we find to be most interesting to discuss. And ironically, we first tried to structure the show going back a little bit in time to where we would do X amount of time for tools, X amount of time for techniques and case studies, X amount of time for newsfeed. And it turned into a more dynamic conversation by allowing us to free flow discussions associated with any of the topics that we had, and not necessarily exhaust them to ad infinitum, but rather bring them to a conclusion. And that turned into be the real value that we heard from our listeners and our followers, was that they didn't get the canned, uptight, shortened, abbreviated, we didn't tell you everything, but, just a partial thing. We actually went through and looked at shaking it upside down and inside out and from every angle. What really was the news value associated with it? What really was the topic value associated with it from the weekly basis? And from that, we really got to enjoy the topics as they came along. Well, it looks like I have the pleasure of having some of my co-hosts join me. Mr. Stuart, by the way, Mr. Tim.
Hello, hello, hello.
Gentlemen, how the heck are you today?
I'm fantastic. You?
Let me make sure my volume is up and running.
Can you hear me okay? And
I can hear you then.
Okay. So, by the way, I just want to say right up front, I hate when people come in and say, so I just want to tell you right up front, and now I'm going to do it. My cable, which is what my internet is, Comcast is being Comcast, and I'm having troubles. So if I drop out at any point, I'm going to drop off and come back or whatever as I can. But I can't guarantee network connectivity, which has been a real treat all day. So we'll see how this goes. This could be interesting.
Not a worry. Hey, Mr. Stewart, how are you, sir?
Hey, guys. How's everybody today? Happy birthday.
I am doing well. I thought I was going to be flying solo there for a little while, which, I always have a problem talking or keeping up with stuff. So I was really getting nervous, right? It's like, wow, what am I going to talk about, right?
Yes, we've often found you to have difficulty finding something to say.
Or wanting not to say something, right?
By the way, Stuart, your ears must be ringing. I was just talking to one of my clients, and I mentioned fuel, and she said, "Oh, I love their podcast. I listen to it every week."
See,
so, as do I, by the way.
We have at least 3 listeners, which is good.
The audience is growing. Gentlemen, I want to thank you so very much. This is officially, being at 104, our 2-year anniversary show.
Yay! Happy second anniversary.
And I don't want to spoil any surprises, but I'm sending something to you all in the mail as affectionate original hosts of the show. I decided to squeeze a couple shekels or nickels or dimes together, and I'm sending something just to commiserate the fact that you have been so generous with your time, your persistence, your consistency, and everything else I can throw in there in an instancy for showing up on the show for all the times that you had and participated and contributing. So I sincerely thank you very, very much that we've been able to hit this milestone.
Well, thanks. Thank you so much. And Lauren, thanks for doing this. This is a lot of fun. It's something I look forward to every week. And, we wouldn't be here without you. So.
Well, or at least the technology. Although I did smoke my laptop last week by trying to do too much on one laptop. I promised myself that once I get settled into Florida, which I'm in process of right now, we literally have a garage sale, one of our last garage sales going on right now. And this week is boxing up and loading the truck. So once I get settled into Florida and we rented some office space, I hope I will improve my technology supply so that I don't have to fight technology to do the multicasting that we try to pull off on a regular basis.
Sure. Cool.
We'll see how it goes. Hey, did you all get a chance to preview the list of happiness that I threw around on some of the subject topics? I didn't know if you had a chance to peek at any of those.
I did. I looked through it.
Yeah, and I've looked at most of them to some degree or other. So.
Well, I'm glad you're here, Tim, because not to speak of things that you often can't speak of because of your close affiliation with this, but Wydham decided to go the way of Marriott and Hilton with their timeshare.
Yeah, yes, they did. Yes, they did. I'm as people here know, and those of you who don't, I am a Wydham shareholder, so I usually avoid talking about Wydham for that reason. And also my wife is very, very gainfully employed by Wydham, so I avoid speaking about Wydham too much for that reason as well. But I mean, in this specific case, what are you going to do? I mean, I don't know that this is a good move for any of the businesses that do this. I think this is driven more by the stock market than by what customers actually want or need or the like. But go figure that companies who are dependent on the public markets are dictating their strategy based on what they think is good for the public markets. I mean, I don't really have a lot to add to that. I'm not saying they're wrong. I'm saying they may be driven by a different set of incentives than what is ultimately in the best interest of the customer, right?
Right, and then to keep you safe and in comfort zone for Wydham, it wasn't so much Wydham in particular as is the trend of this.
Right.
That I mean, I know I've been outspoken against it, saying this seems very bad long-term strategy to divest yourself of a channel of opportunity that looks like will become a different value proposition in the future, rather than the present look of, hey, revenue numbers, ROI below or above thresholds, public interest, let's shed it so that we keep good bottom line numbers. So
the flip side of it is I don't know that it's specifically harmful to consumers, to guests. I don't think it's particularly pro or con from a pure guest standpoint. I don't know that I think it is driven more by short-term, capital market strategy than it is by, here's what I would love to see a company do, right? In a perfect world. And to be fair, Accor is trying to do this to some degree, but, I'd love to see somebody say, how can we be providing all the different types of accommodations that guests might be looking for in a holistic way that makes it, beneficial to the guest regardless of what kind of accommodation that they're looking for. And instead of saying, well, we're going to split this into a clear, pure play hotel company because the street can understand that. We're going to split this into a pure play timeshare because the street can understand that and the like. The one thing that I'm, my understanding is that the folks who are doing this, and then not specifically Wydham, but my understanding is as Hilton does this and as others do this, the rewards, the loyalty programs continue to work across the various platforms. So maybe that's okay from a guest perspective, and as long as they do that, maybe that's okay.
Right. They came out and said that the loyalty programs will be untouched, and they'll enter into an exclusive long-term agreement with each other. So I agree. I think from a consumer perspective, this is very little, in terms of real impact. But it is about the stock market, from what I can tell. It simplifies both entities as a prospect for buying, but it also diversifies the risk a little bit as well. So,
right,
it makes sense. A lot of people get rich from it, and
none of them are us.
What's with that? If you look at my portfolio of stocks, it looks like I'm a tech genius. Unfortunately, when you look at the dollar amounts invested, I look like a poor tech genius because it's like I look at it, it's like I bought Apple 10, almost 12 years ago when it was $78 a share. It's split 4 times since then, and it's phenomenal. I'm a genius for having bought it and sat on it this time. Unfortunately, the amount I bought for it is not going to bring me to the retirement world.
That's right.
Do you guys listen to the Freakonomics podcast? They've done a couple of episodes.
Yes, I love Freakonomics. Yeah,
periodically. It's not one of my every time listens, but yeah, I do listen to it periodically.
The fallout of the last couple of episodes is basically they've looked at buying and selling stocks and having people do it for you, having brokers, versus just investing in an index fund. And they've said over the course of time, every time they just invest in index funds and come out ahead 9% of the time.
Well, I don't know if you guys know this. I actually started my career in digital at Charles Schwab. I worked for Charles Schwab during the dot-com boom.
I did not know that.
Yeah, that's actually, I don't know how deep down this rabbit hole we want to go. I'll do this really quick. I was a music major in college. I actually worked in the music industry for the first 6 years of my professional life, 5 or 6 years of my professional life, not including my years in college and, schlepping around in high school bands and things along those lines. But I built my company's first website. I worked for a manufacturer of electric guitars, and we were the wholesaler for Akai professional digital audio products. And I built their first website in the mid-90s. And then a friend of mine was working for Schwab, and they said, they're looking for anybody who knows anything about the web and this thing called the internet. And I said, well, I built a website. And somebody at the company said, you built a website? Come talk to us right now. So I spent 6 years at Schwab. nonetheless, I went to a lot of financial conferences and and I'm not providing financial advice. I'm not a broker. I'm not a dealer. You guys do whatever you want to do. Past performances, no guarantee of future results, and all that other crap. See,
objects appear closer than they are in the mirror. Everything. Yeah.
They trained you. They trained us well. Yeah. Right. Yeah. Exactly. But they found again and again and again, one of the biggest drains on your performance is fees. Mm-hmm. So the less you trade and the less you pay over the course of servicing the account, on the long run, law of large numbers, it all averages out to everything tracks with the market more or less, right? If you're sufficiently diversified and all that other kind of stuff, and so, yeah, fees will kill you. And somebody did a study. I think it was Fidelity or one of those guys did a study, and they discovered that the accounts that had performed the best over the last 10, 15, 20 years were the ones where the owner forgot they had an account there. Right? It just left it alone.
Let it ride.
And that just tracked with the market, and it's done very, very well. It's the folks who've been trading and, buying and selling and stuff are just chipping away a little bit at a time at their returns, if for no other reason than the cost of the transactions, right? I
have more of an analogy for the traffic driven people. When you're driving down the road and the guy that's jogging between lanes and ducking and darting and you still pull up beside him when the stoplight hits.
right, exactly.
Doesn't get any farther by jumping around, but yes, to your point.
Yeah. So anyway, sorry for that digression. But see, I'm wearing my high school alumni shirt today, so I'm in nostalgia mood, I think.
Okay. Well, I didn't actually know about the Schwab. I knew about the musical history and so forth. I mean, I figured that's how you actually found your wife, because women love musicians. Period.
So since I'm in nostalgia mode, I met my wife because a woman came into the recording studio where I worked at the time and said, "I'm going to be on Broadway." And I was like the most jaded, 24-year-old in history. And I was like, "Great, you brought a check that's going to clear, right? Because I don't care."
Oh, man.
Right? And she turned out to be an amazing singer. And so I started talking to her, and one thing led to another. And we went out on a couple of dates. And over time, I came to realize she wasn't a very nice person, but her friend, Tammy, was awesome. And the rest
I have to give credit to musicians. That's how I met my wife. I had a little jazz bistro downtown St. Petersburg, and a group of girls kept coming in that followed this trio that I kept bringing in, and I liked one of them, so I kept bringing in the trio, making them quote the house band. Yeah. And I just kept buying her beer until she finally said yes. I'm like, yeah.
There you go.
Stuart, all right.
Stuart, you want to share your romantic?
Yeah, what's going on, Stuart?
I have no musical talent, so I can't join in that conversation.
I lived off osmosis. I had no musical talent. I just had the ability to make sure the musicians were hanging around.
Hey, guys, clearly I had no musical talent. I work as a marketer now.
But you have amazing technology, digital marketing talent.
Yeah. Nonetheless.
Hey, and I didn't put this in the list of articles to pick from, but I do to switch a little bit on the political side of things. I'm really amazed that the industry hasn't started talking about the ramifications of how they're changing the immigration policies, long-term effects, current effects.
Yeah.
Because of all industries that have this symbiotic relationship with immigration or talent pools and so forth, hospitality is one of the stronger ones.
For sure.
Right.
And so it's kind of why aren't we as an industry either saying something or at least even dialoguing about what does this mean now and future forward,
So it's interesting because on the ground, people have been talking about it for a while. I think even when Trump was first elected, people were speculating and concerned about the position the U.S. was putting itself in. As someone who literally just renewed his green card this past week, I'm pretty relieved that these changes aren't happening anytime soon.
Wait, you're a foreigner? No, I thought you were from Texas.
A lot of people are legitimately concerned of low-level employees. A lot of them are coming from abroad, and it's not just going to affect tourism, but it's also going to affect the pool of talent. And places, if you look at like Myrtle Beach, they rely in the summer because there's such a peak in visitation. They have to get all these J-1 visas over here. And this could be a big problem for them.
Right.
It's funny. There was an article earlier this month. I'm putting a link to it right now. That that at least according to research, nobody's seeing any impact to travel demand. So I'm going to be a focus group of one for a second, which of course is always dangerous. But I was down in Orlando last week on vacation, and as is always the case, Orlando gets an immense amount of overseas travel in, and you couldn't have. There was no indication that it had any impact from a traveler perspective. So yeah, I am very pro-immigration. I will be the first to admit this. I'm incredibly pro-immigration. I think.
Thank you for your support. I appreciate it.
Well, hey, no worries, man. Well, with some exceptions, but case by case, Stuart. Case by case.
It may not be hospitality driven, but it is in some circumstances. Over here locally in Texas, there's been 3 items that have made the news that are directly impacting. One, of course, non-hospitality is from the farming season right now.
Oh, sure.
Food is rotting because there's nobody to pick or grow. Sure. That's not hospitality, but it is a food supply chain issue. The second is Plano, which is enormous growth. One of the reasons why we're able to sell our house so quickly that we did and so forth is because of the massive amount of moving in. Rents are astronomically high. Housing's even higher. Mm-hmm. Anybody that works in the mid to low level skill set industries, hospitality included, restaurant, there's nobody to hire. They're having to almost double their base hourly salary in their franchise system just to try to get people, because the people have to travel so far in now to work because they cannot afford to work within the radius that they're working in. Right. And so that has a thing to it too. But to your article too, I would contest a little bit. And I only say this from a client's perspective. There's 2 clients I have in 2 destination markets, New York being one of them. Mm-hmm. And their traffic international from their source markets, their traffic is actually diminishing. That we created a fail-safe marketing program of what do we do to replace international demand for them. Now, a lot of moving pieces, demographic profile, price strata, lots of things that can be variant on this. And I can say that the client in particular for one of the accounts is on the lower price scale. So because of that, the more afforded traveler, their market interest has gone down. Now, the affluent traveler internationally, maybe it's true. There is no dip or move. But for the budget international traveler, we have seen the traffic demand go down right now for long-term bookings.
Which can be, and that's a great point because, this article was published about a month ago. And, travel, some stuff, especially international travel, does tend to have a longer booking window and the like. So maybe just the leading indicators, maybe the trailing indicators haven't caught up to the leading indicators yet.
I think New York there was an article about New York demand probably about a month or 2 ago that they said the same thing, that demand from international was down, but overall demand was up because there was domestic demand. So
Well, New York's also going through kind of a rate depression right now. There's a lot of mid and upper tier that are dropping down at least a category or 1 or 2 in their pricing strategy, which is pushing those people down farther. With the typical revenue.
There's a lot of Airbnb in New York. There's a lot of
Airbnb, especially event-driven stuff, and then there's also some new inventory that's been coming in.
Yep, that's right.
That are making unique strides, like that little pod thing that's going on in Times Square now. Just little stuff like that that's hitting highlights. So in that sense, there are some of those impacts for.
Well, and broadening the discussion just for a moment away from the immigration side or away from the international side. I mean, we are due for. I'm not making any prediction that it's going to be this year. I'm not making any prediction that it's going to be next year. But I mean, travel has been very strong over the last 4 or 5 years. Pretty much since 2011 or so. 2012, we really started to come out of the 2008, 2009 nightmare in a big way, right? And I mean, you all know the cycle. I'm not saying anything anybody here doesn't know of demand is crap, inventory falls out of the market because people close or what have you. That cycle then creates some benefit for the folks who remain because supply falls below demand. The business cycle starts to upturn. Demand comes up further. That puts more pressure on supply. We need more supply. So more supply starts to come in the market, which takes time. And at a certain point, hotel supply, room supply is always a trailing indicator, right? Always a trailing indicator. And so a lot of the supply that's coming online now is the stuff that's going to tip us into the next down cycle, right? Because it's gonna exceed demand, or in some markets like New York may already be exceeding demand. So we're due for a, not correction, but just the cycle to go through the downslope. I'm sure we all try to do for our clients is make that the other guy's problem, right? But I mean, supply is a trailing indicator, and there's a lot of supply coming online in a lot of places. So, and that's certainly going to trigger some softness. And it's funny that Robert's joining, because he can probably speak to this to some degree. Robert, we were just talking about the swing in room supply and its potential impacts on putting the cycle into its downside. And that my premise is that we're getting pretty due for that in many markets. I don't know if you have specific research that might.
I have a bunch of that, but I only dropped in because I have to drop off in 2 minutes to set up another thing. I'm like Tim Peter. I'm very busy today for some reason. I don't know. But I was very worried that Lauren might be having his second birthday alone.
That's right.
Would be would be a horrible.
You, Robert. Thank you.
And like any 2-year-old's birthday,
tantrums.
You expect people, tantrums. People difficulty walking, probably periodic vomiting, and of course somebody's inevitably going to soil themselves. Thank
you for putting that all in perspective.
And of course Lauren has repeated that pattern off of every birthday since his second. So.
I do actually. Yes. Well, at least the staggering around and being incoherent part, but that's another story.
Exactly. Well, but I will try to get off of this thing in an hour or so. I'm sure you three will still be going. I
don't know. Without it's hard to say. You're usually a good catalyst for the continuity, so it could go either way.
I didn't provide any news, so sorry about that.
So Robert, before you go, I know you got to drop in just 2 minutes, but
no, I need to drop now.
Damn it! Bye. That was just a tease. That was just a tease presentation.
So, Stuart, from your perspective, I mean, can you talk about what you're seeing in terms of supply, demand, pressures, et cetera?
Yeah, I mean, I'm seeing the same thing in the markets because with real heavy concentration in resort destinations.
Yep.
And, so it's been a while, but you're right. We're starting to see more inventory being built and coming onto the beginning to open, and still, it is an indicator that people have been doing well, but it's going to hit saturation in a lot of the markets. And then you couple that with political uncertainty and then international threats from people like North Korea who are trying to provoke a fight, probably the wrong president, to be honest.
Boy, there's a straight line, by the way.
Well, if there's any president don't want to I'm not saying politically right or wrong. I'm just saying.
No, I know.
But I think you're right about that. There's a temperament issue there. Yes.
Yeah. So I think all it's going to take is one big international incident, and that's going to throw travel into turmoil on top of an increase in demand that is still, it seems to be increasing, so, or an increase in supply. So I think, it's probably a year or two out, but we're going to start to see a downturn. But having said that, I think if you're a savvy marketer, rest assured that over 70% of the hotel industry are not savvy marketers and they're doing a terrible job, So if you're in that top 30%, you're probably going to be okay,
That's right.
Yeah.
So that's absolutely right.
To that end, there was an article that I shared, and I'll throw the link up for it too, because I dug some other stuff, and I didn't share it in the notes with it because I was just pulling it up because of this article, and it was talking about how the Smith Travel Report, a star now, we shouldn't call it Smith Travel anymore, cited Chicago, Orlando, DC as the top meeting planner locations. And I wish, again, Robert, we're going to have to ask him to come back on this, I guess. Sure. Was the numbers seemed lower to me in the sense of expectations and draw. And so I started looking at, because I have a couple clients that are towards the East Asian APAC area, and they're promoting tremendous amount of internal travel, internal meetings. Australia is in particular what I'm talking about. And at best, a lot of meeting planners out of the Indo-Asian area are tailoring to Australia. So I started looking at the European market. They're offering a lot of of green credits, because that's an advocacy within the organizations that are going on that we are absolutely seeming to be ignorant of. There's a lot of internal of keeping it in, traveling in, staying within, marketing that's going on in both the APAC and in the EU about rather than doing the U.S. travel and venture. Because when, like I said, you look at Chicago, Orlando, D.C., I think it's because they're major gateways, obviously, they're major locations.
But I have a question about that. And to be candid, I don't follow the meetings and events side of the industry as closely as I follow other sides, right? So this is not necessarily my strongest area. But I've been around the business for, 17 years now. I speak professionally all over the place, right? This cannot be that different from last year or the year before or the year before that. Chicago, Orlando, DC, San Diego, Las Vegas being the top destinations for meetings and events.
Yeah.
That's shocking to me. Wait,
right.
That can't be that different from what it is, I don't know, every other freaking year.
Right. I don't think that's the thing I'm saying. It's not the difference of it, but I think it's more like, because I see the marketing shift in the Apex and the U's, is that it's kind of like musical chairs. There's one less chair, one less chair, one less chair. So there's this growing, to what you're saying, Stuart, this growing, something's going to happen eventually. The music's going to stop somewhere, and there's not going to be enough places to hide. And there's going to be this. And I think with everything that's going on, the way Stuart just eloquently described it, is that a lot of the people are staying in the EU this year where they might have ventured into the US conferencing. Okay. Or APAC might have decided to come into the Hawaii market or whatever, because I have a person in Hawaii as well. And they're saying that their interest level is also down when it comes to meetings and events planning. Their windows, there's no real long-term bookings. It's all compressed down by at least another 14 days in their mind as to doing these meeting events plan bookings for 90 plus days out. And it seems like everyone's kind of sucking up there and holding their breath for a minute to see what is going to happen. Is something going to happen? If so, when? Apprehension, I think, is what I'm saying. So I just, like I said, the stats, when they pulled up, it just seemed like, okay, yes, this is normal, but is it at the same volume of interest that they had anticipated?
Well, one thing that stood out for me on the article was one of the biggest decision factors of where people were holding their meetings was safety of the location. I'm like, Chicago? It's like second? I don't know. Just my ignorance of the city, but the reputation is not one of safety, for sure.
Right.
I'm surprised Vegas wasn't higher, honestly, because most of the folks I know that are on the speaking circuits that do a lot of conventions and things, I mean, it's Orlando and Vegas, and maybe even Phoenix is one that they say a lot. They're the ones that they're hitting. So I'm surprised Phoenix wasn't higher as well.
And Nashville, for that matter. Nashville's really created a presence for itself. Granted, it doesn't have the square footage space, but it has the attention.
Well, and by the way, I mean, the other thing we should point out in this article is they specifically spoke to folks who are looking for 1,000+ attendee meetings. Right. So, I mean, this is, candidly, there aren't a lot of markets that can digest that kind of volume, period. Right. So, again, the list of cities just can't be that different that often, right? Anyway, I had a question for you, Stuart, specifically. Well, a question for all of us, but Stuart, you said something a moment ago that holds with what I was also thinking. You mentioned most people in this industry just aren't savvy marketers. I look at downturns as opportunities from the standpoint of stealing share from your competitors, right? You try to get good when things are good so that you're in better shape when things are bad, right? And I'd just love to hear, I think Fuel does a great job of this. Lauren, I know you do a great job of this. I certainly like to think that I do a pretty good job of this. But, we try to make downturns be the competitor's problem.
For sure.
Just love to hear your thoughts on that, Lauren. Love to hear your thoughts on that and how you approach this. If we're moving towards things getting a little softer, what are the kinds of things people should be doing now to prep? What are the things that they should be doing when they hit a downturn to think about?
Yeah, I mean, we look at, if I go back to 2008, 2009, when everything tanked before, the guys that were ahead of it and knew, predicted that this was going to come, they were focused on building up their own assets. Their email database still is, and even today is still the number one asset that a property has, if it's done right? If you manage it correctly and you don't abuse it. So building owned assets beyond, email, but also looking at social and physical addresses even now, because we're seeing an uptick in the behavior from people from direct mail because they're not saturated like they were, and there's technology that lets you personalize and things like that. So I think investing in knowing your guest now and understanding what motivates them and what differentiates you from your competitors that makes them choose you at this point. Because what our strategy when it turned in 2008, 2009 was let's spend more, let's outspend the competition, invest in the product, the experience, but also in the reach and the advertising side. Because not only were the competitors pulling back on spend, but they were on advertising, but they were also letting their product go downhill as well. So we ended up in a situation where we had a better product with more reach. So our percentage of market was increasing to the point where a lot of our clients ended up buying their competition and coming out of the recession with more assets, and they were paying pennies on the dollar for it. That's what we're hoping happens again. Honestly, when even when a downturn happens, is that our clients come out stronger and they end up mopping up the competition.
Right. Absolutely. I just posted a link. I'm glad you mentioned email. So I worked for Leading during the last downturn, and we got hit hard by it. For reasons like we ranked organically #1 for luxury hotels. Right. Organic search was obviously it was huge for us, right? A big part of our strategy, et cetera. We were over-indexed in organic search, and we knew it. We were in the process of trying to grow other things right when somebody kicked the chair out from under us. Yeah. And the problem we ran into was we ranked #1 for luxury hotels organically and similar types of terms. And what happened was people stopped searching for luxury hotels, right? They started searching for cheap hotels and discount hotels and really cheap hotels and really, really cheap hotels, right? And, it had a real negative impact on us. Our traffic at Leading, I think I can say this, the statute of limitations being 9 years ago, our traffic dropped 35 to 40% in a week. And because it was just gone, right? Nobody was searching for the thing we ranked for. And email was huge for us in helping, because we had a good database and we were good with using it. We were able to do a lot of things in terms of value add promotions, where do it to a closed user group, right? It wasn't necessarily rate driven, even though sometimes on the back end it very much was rate driven. Three nights for the price of 2, things like that. But also, it didn't become a publicly available rate where you set a new expectation of what this property was worth. And the last thing I'm going to say, and then I'm give you guys a chance to say something on this, but I just posted a link. Fuel in their podcast did an excellent episode about email just the other day, episode 59. So I just posted a link to that has a ton of great tips and things people should learn how to do, so that if there is in fact another downturn, just great tips and tricks in there that I highly recommend.
You just took all my thunder away. You know that, right?
Well, just call me Thor.
Let's see. Let me just see if I can scrape something together that you didn't hit on as being excellent. Okay. So here's, you asked the original question, what are we facing, what we're doing? There's 2 aspects I think I'll say personally about what I do with clients right now. One is an keen interest in being aware of what your current situation is through an audit process. And that audit process scaled to what it is that you're looking to discover. Current, present, and awareness, competitive set evaluation, or complete, through and exit, out the enter, evaluation of every detail associated with your online presence. Because you can't make decisions if you don't have awareness. So to me, that's one of the things that I'm finding that more and more clients are interested in, is that evaluation process from a paid perspective, organic perspective, service compatibility perspective with whom they're using, competitive set analysis, what their competitors are doing, a presence about knowing what's going on. That's first. The second is there's a maturation going on software supportability of things. You mentioned automation, and yes, to your podcast, Stuart, excellent stuff. And like I'm actually playing with the program right now out of Zapier. And I don't know if anybody's familiar. I know you guys are, but Zapier it connects the dots between incongruous softwares. It allows softwares that aren't built together to work together. And it's like connecting dots, basically, which is why I love the thing so much. And they have a program for email, specifically, that I'm messing with that just blows my mind. It's called Lead Score. And what it does is it connects to your prosumer level email campaign stuff, your MailChimps, your constant contacts and stuff. It zaps it. It's called a zap, connecting it to, you guys know. And what it does is it goes out and in its service profile will take your data and begin to cum it for lead scores. What is it that this email, what else can you find out about this email? It'll gen out if there's an address related to it, phone number related to it, a location related to it, a purchase related to it. And it begins to cum this data and categorize it so that you then begin to profile better your email list that you have, other than just having, if you're lucky enough to have first name and email and hopefully zip code. It expands it beyond that. Purchase history, cycles, things that is, location. And it really begins to help you refine that personalization. Stuart, you mentioned your podcast so well. It's about defining the value relationship of that individual to your product, not just to hammer them that they happen to be X-Gen demographic and stayed with you one time, but rather you know more about them to tailor your message more specifically to them. And this is all the fundamental stuff we keep talking about. It's not the shiny new object stuff. It's getting better at the basics. So that's my 2 points. Is you made both great points about the email usage, refinement of personalization. There's a maturation of softwares out there that are getting affordable and usable, that aren't enterprise only level or big scale level only or brand only. And there's also the doing your awareness and understanding your presence and making decisions from that information. So
yeah, for sure. Good. I mean, I think if anyone's listening and they're thinking about their marketing budget for the end of 2017, 2018, and they're looking at things like chatbots, and they're looking at AI and augmented reality and all this whiz-bang stuff that's bright and shiny, stop. And before you put a dollar to any of that stuff, make sure your fundamentals are solid.
Amen.
Your paid advertising is in good shape. Do that first, and then think about whiz-bangs.
Yeah, we have touted for years, actually going back to Schwab, this idea of core and explore, right? Think 80-20. Sure, you want to save some 20% or 10% or whatever for playing with cool new toys, fabulous, do that. But for God's sakes, get your blocking and tackling done correctly. Your email marketing program has to work. Your SEO has to work. Your content has to work, right? You have to have the right content and the like. Yeah. Make sure whatever your budget is for photos for next year, double it.
Yes.
Period. Like, I don't care what number you have, double the damn number right now. Yeah.
For sure. And it's amazing to me the number of people we come across that are spending heavily on advertising. They're doing a ton of display, which I'm not a huge fan of.
Yep.
They're doing a ton of things like AdWords. And they're sending all this traffic back to their website. And then you pull up the website, and it's not even mobile responsive. Right. They're booking in, it barely functions on a mobile device. And you're like,
speaking of,
money straight away.
Speaking of, I don't know if you guys saw this. I just saw this morning. I think it came out earlier in the week, but I just came across it this morning that Facebook is changing its algorithm. And if your website is not mobile responsive, if your website is too slow on mobile, etc., you're going to lose reach in Facebook.
Yep. It's been rumored, but it was announced, yes.
But it was announced, yeah. So
it's people, then they should have been scared years ago when Google started penalizing.
Well, right.
If that wasn't enough warning, right.
But I hear people all the time. Stuart, First off, golf clap for everything you said a moment ago, because damn straight, absolutely. And then secondly, I still run into people who are like, well, yeah, but Google's making it hard. Social is what's going to save us. Social, we got a better opportunity, and social's great. I'm in favor of social, but what's going to save you is by doing the things that you're supposed to do correctly. Yes. There used to be a football coach, Marty Schottenheimer, was coach of Kansas City Chiefs for a long time. And he once said, the way you win a division in football, trust me, this is going to come back to business in a second, but he said the way you win the way you make the playoffs in football is very simple, right? You have to win the games you play at home. You have to win the games you play in your division. And you have to beat the teams you're supposed to beat. Right? And, okay, and he was kind of being half sarcastic or half facetious, because obviously it's hard to do all three of those consistently. But the one that always stuck with me was you have to beat the teams you're supposed to beat. Yep. Like, you cannot go out and lose the game to the people who suck at it, right? And, you know, when we think about SEO, when we think about content, when we think about having a mobile responsive site, when we think about email, sorry, somebody's wandering through the background of the shot over here. When we think about those things, and very much, yes, you can make coffee. It's not going to bug anybody. I'm sitting in my kitchen today. But if you're not doing those things, you're going to lose to the teams you're supposed to beat. You know, you got to win the games you're supposed to win, and you're supposed to win email because it's your customer. Yeah.
Right.
You got to win content because it's your opportunity to tell your story.
If I can throw one more thing in that kind of lends to what Stuart just said, and of course reemphasizes what you said, and that is do what you should do well at first, and that is you have to give good guest. I mean, we're in the business of hospitality. We give good guest business, which answers one of the more fundamental impacts to whether you rely upon social, look at social heavily or not. It's a reality of engagement that people have now. If you don't do good guest satisfaction, guest quality with what you're doing, it will get reflected in communications and reviews, and it will hurt you no matter where you want to go and what you want to say, because everyone's going to look up and say, hey, that's a great ad. It's a cute ad. It's great. You spent a lot of money for it. And then look up at the review and you suck.
Right.
And I'm not going to go there. No matter how much I thought I was going to get a great deal or not, it's not worth it what I'm seeing as a review to it. And to that end, you just have to do good hotel work, and the review process is critical because
absolutely.
I just had a conversation with a client there. They had some need periods, and I'll be actually candid about this just to show that there's a reality to our conversation about hospitality. They forgot to accrue correctly their wholesaler contribution denials. Mm-hmm. So they had a lot of ghost inventory on the books that was looking like it was coming through. So they started doing compression tactics on their rates, only to find out that when the accounting office went over and readjusted the accrual of the cancellations, they had huge holes in markets that they thought they were pretty solid, or not markets, but timeframes that they thought they were pretty solid in. So their whole rate strategy got thrown up in the air. Like, oh crap, we shouldn't be asking this rate because, hey, we know we can't justify it. So anyway, so they come back and say, hey, we want to spend more money doing the ads. And we've been keeping a very tight leash on performance as a key indicator of what we spend. Mm-hmm. They say, we ask for budgets like, sure, you don't want more. It's like, no, this is the monies that are going to get us the yield factor. We can spend more money, but it's going to diminish our return on value. So anyway, they just said, we need to really pump this up. Can't you just add more money? It's like, we can always spend your money easily. The problem is your conversion factor that we've been very happy with is going to go down very quickly. And you're going to end up spending more money for less value proposition to it. It's not worth it. Let us just spend the money we know we get the conversion value on and look at other channels that we can find that similar conversion on as an expansion of budget, but not just to throw money at it and say, oh, if we spend more, we're going to get the same level of business. No, you're not. Right. You're going to get a third and half and a quarter of what you were getting before. So, yeah. Right.
Which, depending on where you are, to be fair, there are times where I will tell people, yeah, you should spend more money.
Oh, yes, of course.
Even though, and I want to be really clear about this, this is definitely one of those that there's so much nuance about. I'm always loath to just say it as a blanket statement. But, one of the things that I see with a lot of folks when you walk in the first time is the amount of business that they get on branded terms, right? Whether it's organic search, whether it's paid search, whether it's email or whatever. And you think about most independent hotels, most individual hotels and the stuff and the like, most people have never heard of you. Right? I mean, fundamentally, a lot of people have never heard of you. So if you're getting most of your business from people who've heard of you, clearly something else is the thing that caused them to hear about you in the first place. And so we do play with, okay, sometimes we're going to spend money on things that are top of funnel that don't convert because it actually creates the demand that comes back and books on a branded term and the like. So this is a little nuanced, and it's something that, exercise caution. Don't just blindly throw a whole bunch of money at a whole bunch of things. You test, you isolate traffic, etc. But overall, I agree with you, Lauren, with the nuance that there are times where we want to say, okay, we need to fill the top of the funnel in a different way. And so how are we going to do that in a very conscious way, knowing that it's not going to produce when we spend that money. What it is going to do is produce as it goes downstream.
Right. What kind of weird questions do you get asked, Stuart, when it comes to like crisis. Oh my gosh, we need more money. What can you do for us, kind of thing? What kind of short-term buttons and levers do you pull that you can get effect with besides just amping budgets or spending more money or something? What else do you do?
The first, we always go to their email database and look at their guest history and see how they've been using it, because it's the quickest button to hit if it's done right. And then we'll look at spending money on AdWords and on even some broader term AdWords if we're doing things like retargeting, stuff like that, the remarketing list for search ads, things like that. So we tend to shy away from display. We haven't seen it have, even though it's a very top of funnel thing, like you were saying, and the return is lower. I haven't found that attribution model that I'm comfortable putting my name behind yet. So programmatic makes it a little more interesting with the AI side and the bidding, but we tend to stick to what we know works. So recently, things like social advertising has worked a little better if we want to just get a boost, if you're targeting the right kind of demographics. Right. But at the end of the day, it comes back to email. And then we always try to see if we can, the traffic you're already getting, how can we do a better job of creating a mousetrap that works? So we're always going to look at the website. Is it doing a good job? So say someone's coming to us and they have a 65% reliance on OTAs, right? Which is not uncommon in right. the industry. We'll say, well, what are you doing to convince a guest that comes to your site? Because we know they're looking at your site and the OTA, but they're choosing to book on the OTA. So what are you doing on your site to convince them? Is the experience good? Is it mobile friendly? Is it compelling copy? Are you giving them a reason to book with you versus the OTA? Price is in parity, hopefully. So what can we do? So we got folks that are doing value adds. If you book direct, you get earlier check-in, or higher speed Wi-Fi, or a video game card for the arcade, or food credits, stuff like that. So really making sure you're pushing that message hard can immediately swing things in your favor in terms of not necessarily total occupancy, but certainly what percentage are coming from OTAs versus direct. And if they're coming direct, you're saving 15% on every one of them, plus, at least, So those are kind of the block and tackle kind of first level things we'll look at. But then we try to get into, if it's more of a longer term relationship, operationally, where are they deficient? Because like you said earlier, reviews are critical. Not only can higher review scores increase ADR, but they're going to dramatically increase your occupancy, because a lot of people have a criteria. They're not going to get a property that's below a certain score, or sometimes they're only going to do it below a certain score at a certain price point. So online reputation is critical. So folks, the hotels that are doing it right, they realize that operations and marketing is really one thing now, in that operations is the best form of marketing. Mm-hmm. Get the hospitality right. The rest of it is just shining a light on what you do right, and you tend to get more heads and beds down.
Mm-hmm. Mm-hmm.
I posted a link, since we haven't been playing much bingo today, but I posted a link. First off, again, golf clap, because I completely agree with every single word that Stuart said. By the way, when I mentioned budget before and spending more budget, definitely never, well, I shouldn't say never, almost never on display. It's usually been things like broader terms that we wouldn't necessarily bid on, things like the market as opposed to, this hotel, or things like that. Social advertising, we're having some success doing things with spending money in social to drive traffic, that then retargeting turns into the conversion, right? And using a retargeting audience of only the people who came in from that stuff. So we're actually able to buy some traffic cheap, because social's cheaper than paid search for the broader reach. But the retargeting is the thing that then brings them back and closes the sale.
There's different kinds of retargeting, right? Because one of the best, most effective things we've done with retargeting is exactly what you say. Spend money on social to drive traffic to your site, and hit them with a Google remarketing list for search ads list pixel, and then you can then target broader keywords, like you said. Because if you're a small independent hotel and you're currently bidding on, say you're in Orlando, right? If you're bidding on Orlando hotels, the ROI on that is going to be terrible.
It's going to suck, right?
Someone's not made a decision, kind of not narrowed it down yet, right? So you're going to get probably a less than 1-to-1 return. But then if you're hitting someone that's already aware of your brand, if they come to your website and then you bid on those keywords, you have a good chance of getting a positive ROI.
Right, because then turn into custom audience. You blinked out there for a second.
The link I posted real quick, just the link I posted, one of the most popular blog posts I have ever written, called "The Single Most Effective Way to Grow Your Brand, to Improve Your Brand's Digital Marketing," and it's entirely about ratings and reviews, because fundamentally word of mouth is more powerful than anything, and having other people have positive experiences is going to do wonders for you. All of the properties that I work with, we tend to index around 96, 98-ish in terms of occupancy. And we tend to index around 110, 115 in terms of rate. And the reason that they're doing that is because we win the ratings game.
Mm-hmm.
So we get our fair share of the rooms in market, but we get them at a much higher rate, and they're more profitable, which gives them more money to spend on marketing or improving the service at the property.
Yeah. Just because I'm feeling like happy thoughts on my 2-year anniversary thing going on here with this, I'll share you a very interesting secret why I can't believe it's been so successful method in a destination market that worked for us. We started scraping airlift rates for the feeder markets. Mm-hmm. And this came out of inspiration because of the success using Adara and Sojourn. And there's a mixed bag with those. They are a solution in some markets that you can help with depending upon airlift, because the data that they draw from is specific to destination value and so forth. But that's another conversation. But they're a great easy button or lever to margin up or margin down depending upon your need cycles. They're more of a long range pickup. But anyway, so we started scraping airlift rates and traffic coming. And then we started seeing an interesting correlation to language cycle on the site, because we have multilingual to the site as well. Mm-hmm. We start correlating not just the lift, but the interest geographically to the airlines that fed the different hubs. And this is more of an international play on this stuff. But then we took, and one of the things you can do with Google Tag Manager, which is awesome, which not most, but some people do, is you can track the dates of interest and the geographic location that the interest was generated from. And of course, the date that they were looking. So you have somebody that's in a location on a date looking for future dates. And we threw that all into Tableau and started creating correlations with confidence factors. If a rate, because airline people are very smart and they don't put mechanical on a lift unless they know they're going to get yield out of it. And they're certainly not going to up rate if they can't get the rate for it, or lower rate accordingly. And we had to determine if lowering or dropping or raising rates was a direct correlation to our need to raise rates or lower rates, or was it an inverse? We found it was actually an inverse, because if they were lowering, they had in mechanical, they increased inventory to lift, but they can't do the yield by rate yet. But we knew that there was more people coming from market. So we created the inverse correlation to it and started targeting, to your point, socially, the conversation in those markets, language-based, talking about rates specific to the date ranges that were of peak value at a threshold of 40% increase or above. And the conversion was just off the chart. It was like you were walking into a little scratch dirt, make gold, because you're now targeted the geographic location, the fact that the rates are lower for flights, which is the increased value proposition of coming to market, correlated with the initial interest to market, language-based from that market, at a rate that you're incentivizing them to be interested in pre-booking on a long-range book. It's just kind of one of those little fun things like, it doesn't work for everybody's market. Obviously, destination market, airlift, and of course, correlating all that stuff makes a data pool. You have to kind of know you want to do this long before you ever think you need it. You need to know whether this is, you just can't say, hey, I got this crazy idea. Let's do this for, rate demand in the next week. It's like you start building it now and you can figure out, hey, maybe I could use this later kind of thing. Whoop.
Sorry, I sorry about that. I hit that too soon by mistake.
No, let's go ahead. Jump, go ahead.
I wanted to bring this up to go back to Stuart's point. This is a hotel that I started doing some work with recently. And one of the things that they told me was email doesn't work. Right? And I'm sorry?
I need to laugh that one. Oh.
Yeah. They said we've been doing email for the longest time, and we do it periodically, but every time we do it, it doesn't work. Right. So I've had to anonymize this in terms of dates and times and all this other kind of stuff. But notice those two peaks. This peak right here and this peak right here. Guess what happened right at those peaks?
I'd say an email got sent.
You got it. An email got sent. The problem that they had was not that email didn't work. It was that they had their tracking set up incorrectly. Right. This was all being funneled into direct navigation because of errors that had been made with the tracking. And, they're saying email doesn't work for us. And I'm like, look at this. You get a pop. And they had a huge list. They had a really good list, But they clearly didn't send it regularly. They were sending sporadically. But they were getting this nice pop every single time. But they just attributed it to, well, we got a lot of organic search that time for some reason, and I'm not trying to call out the hotel. I'm not trying to make them out to be the bad guys. It was the data wasn't helping them make good decisions. But they also weren't looking at the data the right way. Right. But this is just to give an example of what you can do if you've got a good list, right? These are folks who, by their own admission, they would tell you they weren't doing email correctly then. And it was having a positive effect, right? So this just gives an interest. I thought this was interesting when I ran across it because it shows the opportunity that exists. If you look at all the other times, these are very flat periods, and then boom, a pop, and boom, a pop. So
Very
yeah.
true. Very true.
When Stuart and I and Lauren all rant about email, there's a reason for it.
Yeah. It is the goal that it always has been, even though people thought it was a dead thing to use. But hey, do you guys use workflow platforms at all? Generating workflow platforms of conditionals. If I send an email, if they open it or don't open it, if they do, then this happens. If they don't, you wait X amount of time before this happens. Do you guys create workflow platforms?
Yeah, we do in our email system, Fuel Mail, we create. We call them drip campaigns, but basically a logic-based set of triggers based on what they do and don't do.
Well, now is it your own platform that you're doing that on?
Yeah. Right.
Oh, cool. Because I was going to say I've been messing with Autopilot, which is for if somebody doesn't have one. I mean, TravelClick has theirs. A lot of people have theirs, and I'm sure yours is much more superior to what I'm using. It's been kind of fun because I can connect the social and the emails and stuff. And that's another thing. Again, using emails, it's not just a big red button that you hit saying, oh my gosh, we need this business on these dates. Send an email. It's like, no, that's crafting the personalization, crafting the timing, crafting the offer for the opportunity. Yeah.
It all play together. What we do is we work with our clients to produce a master content calendar for the whole year across all their channels. So blogs to social to email, so that they're reinforcing the same. So the promotions or the campaigns that are running, we can pretty much predict that throughout the year. And we might get a little fluid depending on occupancy and things like that. But we know, when it's vacation time or spring break or whatever it is, we know what campaigns we're going to be running, and that's omni-channel. I hate to use that word, it's overused, but it's across every channel that we're marketing on. So.
Right.
So,
and then you're never scrambling. A lot of people that they do the reverse. They're like, oh, it's Wednesday, we've got to send out an email.
Right.
And it's really, really inefficient, and it's certainly not effective because you end up coming up with some half-baked idea versus getting out ahead of it and planning. I mean, you could schedule your emails a long time in advance if you have a plan, and your social posts and your blog content, so you can really get ahead of it.
Well, and there's so many things that happen every year in your market, right? There is the 5K, there is the food and wine festival, there is the taste of town, right? There's holidays, there's things that just are going to occur. There's things like concerts that are a big deal, right? Holidays are a great one. One of my favorite stories, when I first started working at Wydham, check your bingo card. I started there just before we were launching our big summer promotion. And everybody was running around with their hair caught on fire, trying to get this thing shoved out the door and the like. Anyway, fast forward, and people were just, we had 14 brands. All the brand managers are going nuts. The digital team is going nuts. Everybody's losing their minds trying to get this thing done. And in those days, the workflow was the brand did all the work and then handed it, threw it over the wall to the digital team, who then had to somehow make this show up on the websites and get in the emails and all this other kind of stuff. It was not well coordinated. It was not well structured. Fast forward 12 months. and the exact same thing is happening. Right now, we were a leisure hotel brand largely, and so we were sitting around doing a post-mortem after everybody was all burnt out and crushed and crying and weeping and everything, and somebody said, well, this it's crazy that we keep doing this. And I said, well, and I asked the question, I said, can I ask one simple thing? I said, we're a leisure hotel company. Can someone explain how summer surprised us 2 years in a row?
That's a brilliant statement. That is a brilliant statement.
We know when Labor Day is. We know when Memorial Day is. And to Stuart's point, just put that stuff on the calendar. This shouldn't sneak up on us, right? Yeah, you're going to have to deal with the short-term things. Yeah, you're going to have some flexibility and the like. For some of my clients, we do the content calendar 3 or 4 months in advance we plot out the year, here's Christmas, here's New Year's, here's Easter, here's spring break, here's whatever. But then for the intervening months, some of my clients, they're not sure, depending on what's going on in market and things like that, they might want to handle December a little differently as they get closer to it. Great. So we plot out, a quarter, we plot out 2 quarters, and then on a rolling basis, flesh in the third quarter as we get towards the end of Q1. Flesh out the fourth quarter as we get towards the end of Q2 rather. But summer doesn't surprise anybody, right? So you got to have you have to have a content calendar. You have to have those things mapped out.
The great thing is it saves you so much time. Right?
Yeah.
You've done it once, and it comes to because we've got some clients, we're doing some of the planning out on an annual basis. Towards the end of the year, we'll have next December's posts planned in some cases.
Right.
Because we know, one of the most effective things we found from an SEO perspective is if I'm a hotel and I write, something about all the best place to watch fireworks on 4th of July in this town, right? It's a very popular blog post. I know when the traffic is going to start coming to that post, and I know when it's going to peak, and I know probably that it's going to change every year. But I now know when I have to edit that post. Versus writing a new post each year, what I'll do is I'll go back to the old post, update the date, and change some of the content so it's up to date. But then I keep all my search engine equity, and it's going to maintain its rank and probably increase over time because I'm getting more links and things like that. So knowing when on my calendar I have to edit that piece just saves me a lot of time. And I don't have to think about it because it's probably the same time every year. So it's just done. I do it once, and for the next 10 years, I know when I have to piece each year.
Hey, Stuart, Melissa, who's listening, just says that your voice is a little low. I don't know whether your mic from the headphone is working or whether you're coming from the laptop or not. But no, that sounds like you. Yeah, it sounds like it's coming off the mic.
Stuart's just sort of a mild-mannered guy.
He's a mild-mannered, he's very calm. But it kind of goes and yes, to your point about the calendar and so forth, I've talked about Snipply before, and it's kind of like you have your self-generated content, and then you have content that is just very good for your market that you can piggyback on and create your own call to action on somebody else's good content, and they both have value. But there's a maturation in the world now with these software programs that there's a lot of great automated solutions that are not rampant automated that go crazy and do bad things for you, but that if you mitigate them well, monitor them well, and control them and schedule them correctly, are invaluable tools that you can be always 2 weeks ahead of your curve at minimum for good, rich, developed content that you don't have to go, oh my God, it's Thursday at 5. I got to post about this weekend. It's like, no, it's scheduled, locked, loaded, and done, whether it's a Hootsuite scheduling, a Buffer scheduling, or a amplifier or anything else,
I agree with you, Lauren, but I would also say, to Stuart's point, Stuart is, hitting them all out of the park today, at least from my perspective, because I agree with every single thing he's saying. Your calendar should be set up well in advance, right?
Oh, yes.
Including things like, I'm glad you brought up SEO, and Stuart, that's an amazing story about updating the same post every year. That's a great point. But but including things. Sorry, we have skylights. The sun is in a really bad spot at the moment.
You have an angelic glow to you now, Tim.
Yeah, exactly. In a minute, my future's so bright. I'm going to have to wear shades.
Wear shades, yeah.
No, but to the point where when we're putting things on the content calendar for December or for whenever, one of the things that's associated with, okay, this week leading up to whatever is going to be themed. Let's just do New Year's Eve. Let's just pick that as a specific thing. As we're putting that on the calendar, we're thinking about what's the content that's going to happen and when is it going to land and the like. And during the planning process, what are the keywords we're going to target for that period as well? So when you sit down to write the post and things along those lines, or you sit down to create the content, you create the landing page, whatever it happens to be, you're already working from a framework and a structure that says we know what questions we have to answer for the guest. We know what keywords we want to make sure we target. We know what keywords, if we're doing any paid media around, that we're going to be buying to support this. So we need to make sure that the landing page covers those effectively and the like, right? We know what the call to action is and what objective we're trying to reach to. And that's planned way in advance. And it's not something, it's going to take you a couple of days. But you can take a couple of days at some point during your planning for next year and flesh out, 60% or 70% of all the content you're going to create over the course of the next year. That makes it so much simpler. And the other thing that's great about it is you spot the holes. You spot wow, we don't have anything to talk about here. And maybe the right answer in that week, month, day, whatever it happens to be is, okay, we're not going to do anything there because it's peak week for us. It's when we're super busy and great. Then we don't have to worry about it. Or it's, that's a problem and we need to solve for that because otherwise we're going to lose, opportunities in the marketplace, right? You don't have to fill every box on the calendar.
No.
You just have to make sure you're not leaving them blank by mistake.
No, it's like having a meeting where you don't need a meeting. It's a useless gesture to do content that you don't need. But to that point, you made two great things. One, I have a great case study to emphasize your point. The other is I am an advocate, a huge advocate, that when you're the belle of the ball and where you're sold out, rocking and rolling, and you got business that you're turning away, you dial up your branding, you dial up your messaging, because you have the audience to cultivate the relationship building, lead gen building, email list building, newsletter building, whatever it is that you create as communication values, because you are the focal point at that time, so that when it does turn barren and you can shoot a cannon down your hallways and not hit anybody, you have an audience to go back to say, hey, remember when you were so wanting to come during springtime? We know it's September, but don't worry, we got some pretty cool stuff to offer you to make it worth your while.
And you should be talking to our good friends at Flip2 and people like that about how they can help you do things just like that.
Just like that. But the other is a commercial
advertisement brought to you by
Flip2 / Tim Peter. But I have a great case study with this. In Ottawa, I had a hotel, an independent hotel, and they have a tulip festival, very famous tulip festival. But this goes back a few years. There was no definitive anchor site. That the website that they had for the event was atrocious, very, very thin, very almost like newsboardish. And there it is, yeah. And so we built a landing page featuring the proximity and information related to the hotel with the Tulip Festival. And we took it upon ourselves to add as much content, both that was available on the site for the event, as well as information that wasn't on the site. Well, that first year, it was okay. We did business and so forth. Next year rolls around, our page ranked organically #1 for the event in search because the content dominated everything else in market, regardless of the fact that there was an actual website for the event. Because we had better logistics, better content, and so our volume of traffic put us on the top of the list. So yes, to your point, that kind of content. Tim, you froze at a very interesting angle. You look like you were sleeping for a second. It's like when you put the DVR, you pause it at an appropriate moment on the newscast or something. You get people that they got positions they probably wish you didn't catch them in. But anyway, that's a case study proving your points. If you do good content,
we do that with some of our clients, and it's amazing. Most events do a terrible job of building their own website. So just go Google anything that gets a lot of traffic to your destination. Go Google and see what the top 10 pages results are, and just do a better job of all of them. Take the best elements from all of them, put them all in some landing pages on your site. and you have a good chance of ranking. Maybe not number one, but certainly top 3 or 4, and you're going to harvest a lot of visitors for that.
Absolutely. Yeah, oh, go ahead.
No, I was just saying, Lauren, I mean, it's hats off to Lauren. It's a great approach. Recommend.
I'm trying to pull up a presentation that I do for Rocket. There's a slide that I use specifically to make the point of residual value. Google has a neat feature that if you set up your goal sets and your event tracking on your website correctly, and for those who do, you know what I mean, where you monitor what the successes are, Google will give you a wonderful dollar value as to what each page on your website contributes to your overall revenue generation.
Yeah.
And it's a great, great tool. Now, let's see if I can be slick and like Tim and pull a stat page out of my presentation here. Oh, come on. Give me something here. I want my little page. I bet you I can't find it as fast as Tim. I can't find it. Dude, that sucks. Anyway, it showed 2 bar lines. I'm probably pulling the wrong presentation up is what I'm doing. It shows 2 bar lines. One is the traffic line associated with the Facebook post. Now, as a way for everyone to understand, whenever you do a Facebook post, you should have a home for the content. Unless, of course, you're a brand hotel and you can't generate that all the time, then your page is your content or your posting is your content. But if you're ever going to go over and create posts in your Facebook, it should point to, as always, content that is more in depth to your site, or at least a transaction page within your website that people, once they read more information, can act upon the information you've provided them. Something according to those lines is always helpful. So what I had as a chart, which I cannot find in my little list here, damn it. I was really stoked that I could try to show this. The top line would have shown that we did a Halloween promotion on Facebook, and we had a corresponding page on the website related to the Halloween promotion. Mm-hmm. So you saw the spike in traffic for the traffic on social for it, and you saw a spike on traffic on the Google Analytics tracking for the traffic to the page. Well, shortly thereafter, the Facebook post went 0. I mean, it had its effect, it had its traffic, and then it disappeared because the event passed. The one on the website, you notice these little bumps and curls going over the course of the whole year. So it continued to generate. It ended up, because it was used because of the content on it, that Google said it generated another $120,000 because of its associated content value to your website, whether it was linked, bookmarking, shared, content searched, whatever. It contributed, based on the factors that Google uses, a residual over the course of the year of almost $10,000 a month in inclusion of the event itself. Mm-hmm. So even though it was nobody really looks for Halloween stuff in April, you wouldn't think, but there is reasons why people look for what they do, find what they find. It actually had a residual contribution of a lot of money. And so when you make this content, as the truth says, when it's on the internet, it's there forever. That value proposition persists after even the event that you created it for.
So you just gave me a great idea. I do these things for clients, where we send out little updates and things that we call the fast facts, right? Fast FAQs, and it's just different ideas and the like. If anybody contacts me via Twitter or email or whatever, I'll send them one that we did for just keyword ideas, search engine optimization ideas and the like. But it's exactly that kind of stuff, right? It's obviously, I'm going to start with the things we're talking about: events, major national holidays, seasonal happenings, conventions, cultural events, festivals and concerts, local college and university graduations, college tours, family days, sporting events, major and minor professional and college team schedules, PGA or minor league golf tour events, annual events such as Super Bowl, marathons, half marathons, bridge runs, local regattas, etc. Right? Guest life events, weddings, honeymoons, baby moons, girls' getaways, local college and university graduations, etc. So, and then there's a whole bunch of other stuff, but you can take these and start to flesh out, okay, these are the things that we know are happening in market that we just need to talk about and have content around. And again, you can build that whenever you want and publish it live, prior to the thing. You don't have to leave it till the last minute and go, oh, we should do something about this. Plan out your content calendar, make sure you got the right ideas in place, create the content as your schedule allows, and then hit publish when you're ready to, when you need to.
I'm just going to do the screen share because I feel like I have to share this now. So I'm going to go over and just do that. But here was the example I was trying to point out to you. The top line is the Facebook spike. This is the Google Analytics spike. Of course, there was a high residual shortly thereafter. Over the course of the whole year, it had perpetual traffic even afterwards. So again, to the point that you know, these things do last longer than the purpose of their originally build. And to Stuart's point, you know, once you build it, updating it and continuing in perpetuity only adds its perpetual value as well. So,
yeah, a mistake a lot of people do is they'll create a new post each year for that event, and then they're starting from scratch each year. You know, so building upon the success of the previous year is much better. Make sure you keep the same URL. So don't have things like the date in the URL. Just change the H1 tag or the title to be the current year, but keep the URL the same. You're going to build a lot of equity over
Yeah.
time.
I do have to mention the fact that I've designated myself the Chuck Yeager of testing stuff, because I will inflict a pain upon myself even when I don't intend to. I decided that there were certain tools I wanted to try in relationship to WordPress plugins and building things and templates and so forth, because I was trying to work through a process for a client. So what better victim than to put it on my own website? Good news is it's really cool stuff. Bad news is it changed my entire permalink structure and wiped out 2/3 of my referral links. I was like, oh, shit. Because by the time the damage was done and then getting back from it anyway, so I'm going through this whole process of doing 301 redirects right now and so forth. But if you do go to my website, it has a really neat template that is far from finished and infinitely changed from what it was before, because I had such a crappy website before, because as I always said, the painter's house was the last to be painted. But right now, I've only redirected my 301 so far back through May. So I have to go back even farther. This is the detriment of having 104 shows, because now and 167 podcasts and 21 marketing misses. I got to reroute all of the freaking 301s manually for all this. But at the end of it, it'll be a much cooler site and a little bit easier on the eye and a little bit more functional afterwards. But yeah, if I try, it's amazing the templates and plugins you buy for those who are in the space of wanting to try to do stuff like this. And to that end, Holly, I think, is listening to us, but Holly made a huge decision recently, and she's going to go through a major programming course for 6 months, 30 hours a week to legitimately learn coding and programming. That's an amazing undertaking. I mean, she's going to turn into not only the smartest person, but really the smartest person in the room for all of us, because she'll tell us all the things we're doing wrong with everything we're doing. But yeah, she's starting that, I think, in October. So congratulations, Holly, if you're listening, because that's crazy dedication for. Suck the life right out of it. Well, here's the sad part. This is where I learned the lesson. So I went over, in order to load the template, you had to activate it to bring in all the plugins that go along with it. Well, one of the plugins was an automatic recrawl from Google. So as soon as I sucked into the template, found out it changed my permalinks, tried to switch it back to the original template before I got crawled, it auto crawled and wiped out my previous crawl already. So the damage was done. I'm like, screw it. Before I jump back again, I'll just fix what I have right now rather than going back to the old template. I was like, testing environment, staging environment. Yeah, because a fool for me is like, oh, I have to activate it and bring the plugins in. Sure, click. Oh, shit. So I am the Chuck Yeager of testing today. Yeah, I was going to build a parachute before I hit the ground. Thank you, Holly. It does look much better, but there's a whole lot of ungenerated content and links, and it's and of course it has a template interface that is a total vertical learning curve for me. It's like, oh,
yeah, we can't see your beautiful face now.
Oh, really? I see me. Hold on, let me try it again. I'm going to turn it on, turn it off. Oh, okay. It just didn't click it on. It clicked it on once. Sorry about that. Not that probably didn't improve the show by having it off, but hey, there was a couple other links. Just one that I thought would be kind of fun to talk about. The chatbots one is not so much, although it is interesting that chatbots are being finally considered for meeting planners because it is a great interaction tool. But the one that I thought was kind of well, again, shiny object syndrome. It's not something for anybody to be messing with if you're not in that space in the advanced stage. Okay. But neat that they're looking at it in the context of how to improve meeting planner engagement. Holly can't see Tim. That's weird. There you go. So the other article that I want to put in here, which because I do have 2 clients right now that are restaurant driven or restaurant service driven. Sure. Right. Well, it's like putting up a photo gallery and you don't have any pictures. If you don't have the content, the bot doesn't carry the technology. You don't have the backup for it. But yeah, very true for that. No, the other article was the chef tech. Here, I'm going to cut and paste it right now, which was the restaurants because. Oh, I'm sorry. Go, please.
Sidebar about the, and I'm not going to say her name because it'll set off everyone that's listening on speakers. But so you can. I went into the app. I was playing around with the app this week with my kids, and we've got a couple in our house, and we found out you can do the internal calls within the house. So you can like drop in. So my boys have one in their room. So instead of having to go up and scream at them in the morning to get out of, I can now just drop straight in. They don't have to answer it, and I can scream at them that way, which is great. But when I was playing around with it, and I was looking at what you can actually use as your trigger word now, because you can use the A word talked about. You can say Amazon, you can say Echo now, and there's a 4th one that got me so excited, and I'm trying to convince my wife to let us switch to it, because as you know, I'm a huge Star Wars fan, but I was also a huge Star Trek fan growing up too. Now you can use the word computer as the trigger word.
Awesome! I didn't know that.
Like you're on the Enterprise and say computer and use your Echo now, which is pretty cool.
Oh, that's cool. I don't have it. I have the Google Assistant, so I don't know what they're going to allow us to do on that. Yeah. But that is very cool. I would use that one.
If my wife gives me permission, I'm totally going to change, but I'm still working.
I only put the link up for the chef one. And the only reason I brought it up that I thought was of interest to it is that it is, if you look in the context of hospitality as an industry in general, we often talk about how we've lost control of the message, as most industries have with the advent of the internet. The restaurant still has some controllability of its message because it is a self-contained product awareness to itself. Now, it doesn't mean you can't control the response to the product or the messaging from the product, but in the sense of controlling its description of product from a website point of view, I thought it was an interesting point to be made that, you do have the ability to use rich image graphics and enhance what it is that you do and why you do. You have a better way of conveying the message of the ambience and so forth that I think hotels have lost, and eventually I think restaurants are going to lose too. But right now, they seem to have more of an influence on their ability to define their message outward than I think hotels do. Do you agree? Okay. That's why I brought it in. I wanted to bring it in because I actually think there's a value idea to that. I don't think that hotels do a very good job any longer of conveying what their ambience is, their presence, their brand awareness is to their product.
Yeah.
I don't disagree. Do not disagree with that. I think restaurants, because they have a smaller context to be focused on, have still the ability to control their message better. And there we have it, friends. We have Q&A. Like me. Stuart, you're in the middle. Split the deal. I mean,
I think hotels, there's a homogenization issue that's going on with hotels that's part of the problem in terms of how they present a unique voice or a unique brand position. But with restaurants, it's tough because I think it's more, in a way, it's more experiential than hotels, because everything about it is you're going to that restaurant to go to that restaurant. In a hotel, a lot of times you're going to the hotel because of another reason, right? You're in town for whatever. So I think the operational side, even though we've talked about how important operations is to hotel marketing, I think it's infinitely more important to restaurant marketing because you got people that are going to come back multiple times. A lot of locals and tourists that can come back multiple times, either during their stay or throughout the year if they're local, based on the experience. And the marketing has very little to do with it. I can think of my favorite restaurants in the world that I've been to dozens and dozens of times. I've never seen an ad from them. I've never been to their website. Um, my experience or my exposure to advertising or to marketing from restaurants is often if I've looked at TripAdvisor and found something, I might go and look at their menu online, or I might look up the directions, or I might look up their phone number. So I think the brand is controlled by me walking in the door and how good the food was, and more importantly, how good the service was. And so if I was a restaurant, that would be where my primary focus is. Sure, I'd have a good website that had the menu and had pricing and had directions and had a way to call and all that, but it's reviews from peers are going to be more important, I think, than the website itself for a restaurant.
Okay. I'll add a statement to this, Tim, so that give you my perspective a little bit to this. And that is, the last time I thought that the hotels could convey a sense of individuality or experience was when the Heavenly Bed was introduced. Because you're talking about enhancing the experience perspective of a stay that could be considered similar to everyone else. When you go to a restaurant, you have a signature dish or an ambience type. That to Stuart's point, you have a shorter time duration, a more a-specific reason for visitation. So more of a singularity of message of your uniqueness is able to come through on a restaurant's brand messaging than the uniqueness that now hotels seem to have lost. Not working today. Yeah. Okay. I would be Bach. Well, I like it when I get to bring something that's like, no, I completely disagree. Because we're seeing you fine, we're hearing you fine. Yeah, about that at that point, yeah. I don't disagree with you in that statement. But I say that it only represents 10% or even take the 20% of being luxury. I think it only reflects 20% of our industry as a whole. I think even restaurants. Hold on. The homogeneity of brands, and as much as they try to diversify themselves, the homogeneity of brands, nobody goes over and says, I got to get me something. I would love to stay at a Ritz-Carlton every time I traveled somewhere, but I can only afford a certain thing, or it's not available in market. But I can guarantee you there's a Greek restaurant in every town I go into if I want Greek food. And if there's an Italian restaurant, there's an Italian restaurant. And there's a more a-specific mood to what you want with restaurants that are clearly identified. Right. And they all have their unique value brand proposition idea. When you say Panera, you have a clear picture of what it is. When you say Marriott, you got 31 flavors to decide from. And that's why I say 20% of the industry is independent hotel. Right. I do not disagree with you. But that is an exception story, not a mainstay story.
I would agree with Lauren. Right. But the majority of Super 8s probably fall into the 48% category, not the 98%. Yeah, but in terms of how they approach it. Yes.
Right. And and I do not disagree with it. And I don't disagree with you saying the content, if they're not doing it, they're not doing it right. I do not disagree with it. I'm just saying that a restaurant has more of an opportunity to craft that conversation than,
But there are good Paneras and there are terrible Paneras.
Right.
Right. I think
That is a very good indicator of almost any food and beverage operation. Yes. Or, yeah.
Oh, my goodness. You know what? First off, I know you have to run, Tim, so I'm just going to go. I love when we get to go over and disagree about agreeing to something, but disagreeing in context. I appreciate the hell out of that. And again, to reiterate the fact, being that it's anniversary nostalgia time, I sincerely appreciate all the time and all the years that we've gotten to do this, back and forth as to yes and agree. Jane, you ignorant slut. If we ran your business like you run your personal business, we'd have every 2-bit whatever. But I love for that. I know you have to run for it, but I'm just going to say is that these are the kind of conversations for those who have joined us or not joined us over the course of the 2 years that makes this show very unique. Is that one, we're unabashedly not embarrassed to go over and disagree. Two, usually it's in principle, not necessarily in purpose. And it always, out of all that conversation, I always learn something from the discussion that I didn't go into with it. And I'm just in this case, I still disagree with you, but I agree with you. And everything you said is true. I just disagree in the context of the statement of what I said with the thing. But besides all that, for those who don't know, if they haven't already known, how is it that they can find more about you or what it is that you are passionate about or what it is that you do? And again, thank you so much for all the time and all the commitment and all of that. Next week, I'm going to need all y'all's help with the guest host because Thursday, I'm picking up the truck. Friday, I'm literally loading it, except for the time I spend on the show. So you can imagine my wife's prioritization is to brevity, sincerity, and get off the damn show.
And yeah, I will be driving to Lubbock again on Fridays as I'm prone to do.
You should just start doing long haul trucking stuff to Lubbock and have a sidebar business for all the traffic you do. Just drive an 18-wheeler down there, make some extra cash while you visit.
When I make that drive, that is very much how I feel. So. And this time, my wife is not going with me, so I'm just helping my daughter, and I get to make the beautiful 5-hour drive back alone, which is always fun. So.
That's when podcasts come in. Hey, there's a great podcast you should listen to from Fuel Travel. If you don't listen to it, it's
I subscribe.
Aloud, go listen to that one too.
It's in my Stitcher. It's in my Stitcher radio files. You bet.
Such podcast for it.
Yes, except yours are short. Tim. But he's got a lot of them. So you can go back.
Here to go back to my old conversation. If you'd like to listen to Hospitality Digital Marketing Podcast, you're SOL for another day until I redirect.
And all I can say is I'm really sorry I missed apparently a heated argument about bathroom cleanliness. I don't know, which is what a way to celebrate a second anniversary. So that's great. Again?
It won't be the first time and definitely not the last.
Oh.
I don't know if it was potential. I think it was in actuality. I think you're more of an optimist and assume that more
empirically. Oh, yeah. Yeah.
And I don't disagree with that statement that if you're not doing it successfully, then you're doing it wrong because it's content miss. But I say that right now, given the dilution of hotels compared to restaurants have a stronger opportunity for brand awareness or understanding of what they offer as an experience compared to hotels now.
Mm-hmm. Absolutely. Yep.
I don't disagree with that opportunity. Tim, thank you. Thank you. That's all of us. It's not just me. It's you guys by far, too. I mean, come on now. You've been hanging out for 2 years with me.
Stuart was kind of a Johnny-come-lately. I mean, he saw the juggernaut and said, I got to attach myself to that.
Well, you got to figure well, it's like calling the guy that's with 10-year tenure the newbie because everybody else has 40-year tenure. I mean, he's been hanging with us for quite a while now.
He's got the scars to prove it, and the bills and the bills from his analysts just keep racking up because of this.
I thought we were cutting the bills down. I thought this was more therapy than it was anything else. Tim, take care. Thank you.
Bye.
We'll see you next week. Thank you. Speaking of therapy, Mr. Ed's not here. He's enjoying the high life with the family up in, was it Charlotte, I think? Is it? Or Charleston. Charleston. Charleston or Charlotte? Which one?
I thought you were going to spread a nasty rumor about Ed had been sent to rehab or something like this. Which we can. Since he's not here, we can just start rumors like that.
He'd actually probably enjoy the fact we talked about him, regardless of whether it was for rehab or not.
Yeah. Except they sent the whole family to rehab. That's so disturbing with his children. I don't know. So, yeah.
Hey, Master Robert, thanks so much for coming back. And I don't want to stretch it too far for us, but I threw up one last link just because it was a fun one. It wasn't in the pile that I had sent out originally, just because it had some neat, fun little stats. Some of them, yeah, duh. And other ones were kind of like, that's kind of
mind-blowing stats. Wow.
I didn't write the header, which was the bait graph. That's another thing. Just to bemoan stuff about client engagements and so forth. When you start doing these audit things and so forth and going through the process, I think one of the most stark realizations that they don't understand is H1 referencing. And for those who don't know, it's your header one referencing on your pages. When you're looking at SEO, you don't, or whoever does this for these people, don't realize the value impact of H1 when it comes to your SEO value. And they will do these stupid statements in your H1 reference on a page that are either redundant to the page name, redundant to the content in the page, or just badly written. And it totally destroys the value proposition of the H1 for that page.
Yep.
It's just a minor gripe on my part, because as I go through this process in the auditing process with people that are asking me to do these things, it's just like, guys, this is the basic bread and butter, nuts and bolts stuff. H1s, alt tags, ADA compliance. We had one where it's like, am I ADA compliant? It's like, well, we're not going to do two-tone backdrops, but there are things you should be baseline doing, like, I don't know, alt tags. Yeah. They had, I don't know, almost 900 really crappy images, some of which had the Getty white label still on it, the watermark still on it.
Nice. That's good.
Yeah.
So people can see where you got that image.
It's only $900 a pop for bad violation usage, not to mention they'll track your butt down no matter where you go. But all of them, no alt tags, not a single alt tag on all of them. Like, guys, where are you hosting this stuff? We need to get Henry from Ice Portal on to start giving us the riot act on image modifications and so forth. Phenomenal man. For those who don't know Henry with Ice Portal.
Yeah. Caption, all the stuff.
Oh my God. Yes.
Whole bit.
Yeah. But anyway, just that little list there. Is there anything that just, we got a couple minutes left before my wife starts beating on the door, wondering why I left her alone at the garage sale for 2 hours?
Well, she can certainly wreak her revenge with that.
So. I'll be paying for it later. Guess who's lugging in the entire garage sale once it's over because of that?
yeah, exactly. Actually, with your garage sale, have you found any sort of charity, like a church or something, who will then haul all the leftover stuff away as a donation and give you a donation receipt when you're done?
There are those there, but actually we're going to be doing it to the shelter here, and they can't pick up large quantities of stuff, which I'm assuming we're going to have left over. So when we get the truck on Thursday, we're going to pile it all in first thing and bring it down for them to use, because we have a soft spot for puppy saving and stuff like that. So we'll make the extra effort to get it to them rather than just give it away to the convenience of a church that can do it. Not that they don't do good stuff. Do not get me wrong. It's just we wanted to pick and help the puppies. So,
well, there you go.
Yeah. And you and I still have to do lunch in this next week. This is my last week in Dallas as a resident. After that, it'll be as a visitor again. So
yeah, that's right. Well, through Wednesday, I am around. So
I'll have to figure time for that. Stuart, are you ever going to make it? Do you make it to Texas at all, or do you just stay in the land of?
I've only been to Texas one time, Anaheim. No, Austin for is it High Tech? One of the conferences. Maybe.
Oh, okay.
Yep. Oh, yeah. I remember High Tech in Austin. Yeah, we did High Tech in Austin 2 years ago. No, 3 years ago now. 3 years ago now. Yeah, 3 years ago.
That's the only time I've been to Texas.
So. Austin is very nice.
Austin's a really neat city.
Yeah. The rest of Texas is hit or miss.
How's Lubbock these days, Robert?
Lubbock is actually a cool little town, very much like being back in the 1950s in many aspects. But my daughter loves it. I mean, it's great. She loves being out.
You should just buy a house out there and do this back and forth, and she stays in it while you're not there.
No. A friend of hers, their parents bought her a house, basically, and is going to rent it out, and she has roommates. And those roommates basically are paying for the house for the parents, right? It's a classic kind of rental property. Their daughter's living in a kind of rent free. The other three, rentals, are covering basically covering the mortgage, and they're turning a little profit. And they have another child who's probably going to go to Texas Tech, and so they're going to have this probably for 5 or 6 years. And who knows? After that, they may just wind up renting it out to people. So Yeah.
Stuart, now you haven't had a vacation yet, have you? Or did you sneak away and we just didn't know it?
I took a week off to hang out with my kids, but we're actually going to a little island called Fripp Island week after next. So
Crip?
Fripp, F-R-I-P.
Oh, Fripp.
Yeah,
Where's that?
South Carolina. Yeah, down the other side of Charleston. So, very quaint little. You know, I live in Myrtle Beach, so it's like I'm always on vacation.
Yep.
That's what I was going to
say. Did you get any pushback from everybody having to get evacuated off of the Outer Banks? Did you get any residual bump from them having to relocate or anything?
No, we didn't see any kind of bump. We looked at it to see if we were, the only time we've ever really seen a major push from something like that was when the Gulf Coast had the big oil spill. We saw a ton of traffic come from that. Like people down that used like Alabama, Kentucky that usually went down that way were coming up to Myrtle Beach instead.
Okay.
We kept a few of them, but for the most part, it's gone back to normal. But yeah, we didn't see a lot. It only affect. I don't think there's that many units there. I think it was like 3,000 people were evacuated.
Yeah, well, I mean, and it was also it wasn't going to be a huge earthquake, but
long term. So yeah, we didn't really notice a big boost.
God, can you imagine the scramble of that, trying to figure out reconnoiter, because that's your big cash time, and to have all your business be told to leave. I mean, that's crushing. I hope they do something like the oil spill.
Oh, and it's taken them a while to get it fixed too.
It's no short like, it's a day or two and everybody comes back. It's like, no, this is 2 weeks at peak business, So I hope that they figure out some compensation.
With either hurricanes or we've had flooding a couple of times that have affected us, which have had similar impacts. But yeah, it's never been like that where the whole island is evacuated.
Yeah. No, not good stuff. Well, but with that said, we're at that time-ish, kind of shortish. But hey, so Mr. Stuart, if people want to find out, other than the podcast we keep ranting about, more about field travel or yourself.
Again,
I think it's raving about. It would be better than ranting about.
Oh, good point. Yeah, choice of words.
The podcast is fieldtravel.com/podcast. Last week's episode was about email, as you mentioned. We actually got a special guest next week. We got Valerie from Trust You is going to be on it, and they're going to talk about the study they did, which is interesting. It looks at the correlation between engagement with your guest on property and guest satisfaction and ratings and things like that. So that's going to be exciting. And then we need to get you guys on the podcast at some point.
Yeah, I promise that once I get settled into Florida, I'll be bugging you about that. I'd love to join. I would be very flattered.
And then you can get us on Twitter at Fuel Travel, and then me at Stuart Butler as well.
Awesome. And Mr. Cole, for having been, then come back again. And, just for those who want to know more about your mysterious side, where can they find what you do?
No, I'm not going to post anything about my mysterious side. No. Although I'm sure it's not nearly as mysterious as Lauren's mysterious side.
Well, I've done a very good job of hiding my mysterious side by totally destroying my website temporarily. So,
well done.
Yeah, you missed the part where I dropped in a template to update stuff, and it wiped out all my permalinks, and then auto-crawled itself, so I couldn't go backwards. As I mentioned earlier in the show, I turned into the Chuck Yeager of website plugin testing.
My favorite was a particular client I wound up working with, whose previous group they had on their website. They had put the robots.txt, like don't fall, sort of thing, and totally, did a new site. Oops, forgot some. Totally blew themselves away for it took 45, 60 days to come back. So, just unbelievable.
Won't be that long, but I will be. Right now, there's a huge, wonderful void on hospitality podcast dead links that you can easily capture any traffic interest whatsoever, since now all of the redirects are totally crapped out. So, yeah. Anyway, Mr. Cole, where can people find you?
At Robert Day. At Robert K. I got to practice saying my name. Yeah, that would be helpful. At Robert K. Cole through most social media or rockcheetah.com.
Outstanding. And again, a sincere and genuine thank you for all the shows and everything, and just participating, the time spent. And, like I said, when I started the show this morning and I'm sitting there talking to myself, I'm like, this would suck for most people if I was the only one they ever heard about, because I'm by far not the smartest one in this group. So it's going to be a lot about opinions and a little hand puppets.
And I think everybody who's on this feels that way, except Ed. So
Thank you, Robert. I feel so reaffirmed now. Now I need to increase my therapy. But anyway, so we have hit the 2 year. I get to change all my advertising to not nearly 2 years, but now over 2 years, because after the end of the show, we are officially over 2 years and going. So
there you go.
Holly,
we got a laugh out of Holly.
You got to laugh out of Holly. And Holly, thank you as always, too. Even though you're not visually on the show, thank you so much. Right now, visually on the show today. You've been many times on the show and an ardent supporter for the whole entire time. And thank you also very much for being that person. With that, we can wrap up 104. And gentlemen, thank you again. And hopefully, like I said, I'll need your help next week because I'm probably going to be the short time person on the show this upcoming weekend. We do have a guest host, Jonathan from NewsCred, which is, we talk about content. It's a content gen site. Be interesting to kind of corner him on some things. I want to ask him about some of the functionalities, I guess. I don't know a better way of saying it. But anyway, it'll be a fun conversation. I hope that you guys can see it in your schedules. So with that, I think we are done. Gentlemen, thank you very much. We'll see you next week.
That's great.
And